Bright and breezy morning to you all. Welcome to the Flow Show. Hope you're doing well. Morning, Kay.
Morning, Ryan. Morning, everybody. Already with the popcorn, the suntan, and sunglasses.
And 25 gallons of coffee. All ready to go for Madame Lagarde later on. Let's see what wonders she pulls out of her hat. Probably another brooch. Anyway, right, let's get through all the bits and bobs before we get there. China still fixing their rate below 720, 7.1874 last night. They've also decided to ask some banks to hold off immediate dollar purchases in the interbank market to square off FX positions, according to sources. They want banks to hold positions until their net exposure hits certain levels. So this is if they sell dollars to customers or whatever, the PBOC don't want them getting out those positions, squaring those off in the market and buying dollars, and thus causing pressure on the yuan. Call it manipulation as much as you like, but that's what they want to do. We've also had, obviously, this adds to the story we had previously where they need permission if they want to trade $50 million or more from the PBOC before doing so. So China is feeling the heat about the yuan weakness, and now they're pulling out all the stops to do so. And it's doing the job for now-ish. We've stopped going up. I think that's as about as much of a win as they can class it at the moment, Kay.
Well, I mean, they're just trying to manipulate their way out of the weaker yuan, at least for now. If you look at it, if you look at the picture of what the dollar China does now, it's like you put a couple of lines on there, you watch it, but you don't do any technical analysis because that's gone out of the window, because they are just manipulating in any way that they can. Because at the same time, they injected money again in the market. So they injected about 110 billion CNY, which is what, 15, 20, yeah, 15 somewhere $billion equivalent. So they are injecting money in the market, fixing the dollar CNY low, defending the 2% band, asking people not to buy too many dollars, or at least not all. So that means that if a client comes and he buys, like, I don't know, $250 yuan for any good or so reason, you have to wait until you lose money before you can cover more. If it would go up a little bit and someone else getting paid as well. And then and I read something else there. They gave City China gets approval for qualified foreign investor clients to trade commodity futures. So at the same time, they're trying to open their market to re-attract investors. So it's a full steam ahead manipulation to control their market. Where is it going to end? I really don't know.
So what's the options from here then? Because, you know, they're doing all this tinkering and telling people not to, you know, buy dollars and this and that. Surely the only next step they got is to go MOF style intervention, haven't they?
Well, I think there is this thing. I don't think that they really want to get all the speculators out of this market. That's what they do. They are trying to force, and it might not be, or who knows with them, right? They can intervene and put it back at 715 or at their fixing rate, for instance, whenever they like. And but I think they want to get the speculation out of the market. But it doesn't mean necessarily that they want dollar yuan back below 7, for instance, because they know that they will have to export at one stage, and if your currency is too strong, blah blah blah. They just want to kill the whole speculative thing, and they could do it in a way just by keeping everything stable. Like, for instance, if you look at the dollar Hong Kong, you got 1.5% to play inside, and that's it. They can hold this market for as long as until the speculators say, right, we have enough of trading dollar China, let's move on to something else. We have to deploy our resources elsewhere. And then that will probably be 2/3 of the battle won, but that afterwards they can still let it go, you know. So it's difficult to trade right now, but if you have your overall view, like for instance yourself, it's fine to trade against those prior highs, to keep that 2% band in mind around the fixing, and you can bank on a few levels. And then for people who would like to trade the other side, I reckon you have like a couple of levels there, like for instance 725, which is not too far away. That's less than 0.5%, right? Or you can lean go it a bit wider if you are a longer term player and say like, okay, I can risk 2%, like for instance below 715 or so, and play it like that. But every technical analysis in between right now is futile, right? I mean, it's just useless.
Yeah, it's just you really can only use it just as a bit of a guide, really. Somewhere, you know, like most technical analysis, just somewhere you want to balance your risk against and something like that. I mean, I'm in two minds about the speculation side of things, you know, because I think a lot of the move has been people trying to get out of China, you know, people in China getting money out, you know, putting it into dollars, parking it away. Maybe if there is a speculative side to it as well, I don't know, maybe they could hike up margins or start increasing costs for holding short positions as a way to squeeze them out rather than getting straight into the currency. But like you say, you know, when they're injecting billions of yuan into it, they can't then start buying it all back in intervention. So it's a strange situation over there.
The big intervention that they will have to do, the big thing that they will have to do, of course they have reserves. They have plenty of reserves, $3 trillion equivalent or so. I mean, they don't really need to go and sell treasuries. But then the big hint at saying like this is enough and now the yuan is going to reverse would be if they openly go and say like we sell treasuries and we will use the proceeds of that to sell dollar yuan. That is going to be major if they would any day do that. But I doubt that they will go that far to do it in an open way, you know. That's why I'm saying like pick your level and pick your poison. But I mean as I said, I mean if you're short dollar China, your risk is clear. It's either the 2% band, but that can fluctuate a little bit because if they start to change their fixing is a little bit higher, that band will go a bit higher. Or you just observe the prior highs and that's it. And if you're lucky enough to be short close to those highs, you can manage it now. But again, in my base idea is that over time it's still going to go higher. So I think if I see any move down to 25 or 20 or so, I'm going to try the other side again and then decide where to place it. But for the time being, I mean, it's like when you invade something, you know, any resistance is futile. So and I guess we're in that scenario right now where they really tell the market we have this under control. Don't think we are going to let you get away with another one.
Yeah, and it's pretty much the reason why I'm happy to play on the short side for now, because you know when they're clear, they're clear. But yeah, it's not out of the woods yet. And we'll see what happens. Any other quick question? What happens in intervention? BOJ buys JPY and sells dollars, and they don't just go into dollars or sell dollars. They can split it around the different pairs. As far as losing money goes, well, it's all a matter of context. You know, Kay can correct me, but they won't square up immediately after. They can give themselves some room, because if they square up immediately after, they'll add to the move in the opposing direction. You know, they can suck it up for a bit. You know, what do they do in that situation? They wait until the price goes their way.
The MOF and the Bank of Japan have no P&L. I mean, they don't declare we are losing or making money that much or that much every day. I mean, This just goes into to an account, and it's like accountancy things. They don't declare losses anytime. And by the way, if you would think that Bank of Japan is losing money, think again, because they have been buying so many dollars on the way down, between even starting from 125 many years ago, but all the way down to in the 80s and the 70s. You know, they are long dollar yen at a pretty good average if you would start to think about the Bank of Japan's bottom line. No, the only thing is, when Bank of Japan intervenes, is that you have to think about it in terms of what do they have as reserves. And so they have a lot of reserves. I think it's around, give and take, like $1 trillion or so equivalent. So they still have plenty of money, but they may say, we don't want to get below a certain threshold, like, for instance, 800 or 900 billion or so, in which case that they will have to do something, which is likely to be sell a few treasuries, for instance, or something else that they have. But don't worry about them. Don't worry about the Bank of Japan. If they want, they have the ammunition to put dollar yen back down to 120, but they don't, because they don't want to disrupt markets in any way. They will only intervene if they think that the market is disrupting their market, and that's what we've been seeing. And if you look at it, for instance, they have been looking at that famous, well, the closest we have is the NIR, right? But it's the trade weighted index, which they produce themselves, and the MOF has been looking at that lightly last year especially, and sending out warning signals when this trade weighted index goes back to the lows in yen. So that is maybe what they're banking on, rather than a pure dollar yen rate, and the rest is speed. But to come back to your questions, they will never declare losses or P&L. I mean, imagine their P&L if they would have mark to market all their dollar holdings that they bought via interventions before. They would have been looking at they would have possibly just intervened with the profits that they made from those interventions. You know, don't think about it in terms of P&L for a central bank, especially not guys like them.
Do you think they're still long on the interventions in 2011 when they were buying it down there?
Well, I mean, yeah, but the thing is, it's all accountant stuff. You know, they keep their levels of foreign exchange reserves at they really ramped them up, of course, during the big interventions, and you talk about 2 decades really of interventions from the 90s until 2012. You know, so. Will they have unused?
It was a bit of a tongue-in-cheek question.
That is possible, huh?
That was a bit of a tongue-in-cheek question.
Yeah, I mean, they may likely have some, because they ramped up their reserves, but they will probably be looking at where their level of comfort is with FX reserves, rather than actively managing them. Or looking at them really especially not on a day-to-day basis. Those people they don't look at I mean, the best example is dollar yen went up from 110, let's say, when the Fed changed their tack back in 2021 to 150, but they weren't intervening before 146, right? So I mean, they are not looking at this on a day-to-day basis. They're looking at it, who disrupts market and what is disrupting markets. So yeah,
cool. Thank you very much, mate. Right, moving on, but we'll stay in Japan. PM Kishida has said he will ensure the end of deflation, will carry out bold economic steps, including the gas subsidies, will take policies to consistently achieve wage growth that exceeds the rate of inflation by several percentage points, and will take steps to attract investment by private and public sector, sized at around 150 trillion yen, will compile a bold new economic package. So this is part of, well, I don't know if you want to call it 3 arrows or 5 cannonballs, whatever you want to call it. One question I did have, okay, it says we'll take steps to attract investment by the private and public sector, sized around 150 trillion yen. Is that he's looking for people to invest that money, or he's going to put packages in place to attract that investment?
I mean, they will have to issue bonds, right? That's how a government does. They issue bonds, right? So they are going to probably make it as attractive enough for investors to come around. And then you talk about it's a little bit, you know, it's still Japan, right? So yeah. they probably, that was likely directed more at investors between bracket like JPIF or the big insurers, the big trust banks, and the Japanese asset managers. So they're probably going to make it, and that is where those JGB yields could actually start to go up a little bit as well once that's in place. They're actually going to make it attractive enough, I think, for them to get to the market. Now it depends whether they are going to go 10-year and above, or if they're even going to go on the shorter end of the curve, like the 5-7 years or so. They won't do anything shorter. It's likely going to be 10 years and above, but they may make the 20 and the 30-year very attractive, for instance. So I think it's rather directed at their own big mammoth in investors that big.
Yeah. Now we were chewing this all over in the chat room yesterday, what it all means, and the general consensus, I think, is that, you know, these big policy plans and big budgets and injections and whatever they do is still yen negative. Okay, even though it's trying to promote inflation, foster growth, etc., etc., it is fiscal stimulus. It does need paying for, and that's going to keep the yen on the weak side, and the Bank of Japan on the easing side as well, because they need to wait for these policies to come through to have an effect, and then hopefully the effect is such that they can get a better economy, get inflation up, come out of deflation, you know, and then the Bank of Japan can start tightening policy, getting things back to, well, I say a normal as in what the rest of the world sees as normal. Yeah, so there's a lot of water to go under the bridge. So don't expect these plans to be yen positive. It's going to be a long time before we see it. Yeah. For the short term, it means we potentially stay as is, and we keep an eye on the data, obviously.
It's of course speculation from our side what's going to happen.
Yeah.
It's always speculation, but to me, what it looks like is that, and okay, Ueda will probably either prove me right or wrong, but to me, what it's going to mean, and that's their aim. The aim of the whole thing is to get the economy more on track than it has been so far, because we've seen better numbers out of Japan, but then we've seen better numbers elsewhere as well. Japan is there's no talk about any Japanese exceptionalism, but that's what they are trying now to stamp into their economy, to get a better economy. But in order to do this, you have to go through, let's say, some pain, because they may even, or they are saying that they might not do it, but that means that they are still looking at it, high taxes also. They are going to water down the public finances if you inject a lot of money, or if you spend a lot of money to do that. So it's going to probably, what my base case is, it's going to be in 2 waves. First of all, the first wave, the actual wave, is going to weaken the yen because of those watered down finances. You inject a lot of money in the markets, and my view is that goes along with the fact that Ueda is going to be very slow in normalizing, because whatever central banks may say about independence and all that crap, it's clear that since Abe came on, that the government, the MOF, and the Bank of Japan are together taking care of the Japanese finances. There's no independence there, right? So, and I think it's and I think Ueda is not too much different in that respect from Kuroda for a certain period. So I think it's going to come in two waves. You've got a wave of yen weakening because they are going to want to sponsor those expenses from the Bank of Japan, or it will be the cooperation, like they say. And then in a second wave, or in a second leg, when if they succeed, and that's going the data who will tell us if they succeed, then that may be the reversal where the yen could strengthen for years. If they succeed in their plan, the yen could really strengthen for years. And then Ueda can once they sponsored the whole thing, once the government is funded, then you can have, like, all of a sudden a turnaround in the market. And we can hardly put numbers on it, but I wouldn't be surprised if the yen in a second phase strengthens 20 or 30%. It could be possible.
Yeah, but I think that, look at it, if you try and judge how to trade it, Japan isn't like any other country. If other countries put in stimulus measures and whatever, you expect a fairly quick reaction. 6 months, a year, something like that. It doesn't sound quick, but when you're talking Japan, that 6 months, a year is probably 5 years in Japan. So you can't sit here now and say, yeah, these plans are going to work. Yen's going to strengthen in 5 years' time. We don't know what the rest of the currencies are going to do in that time. Dollar yen could be at 70 again because the dollar's collapsed because something's happened there. It could be at 200 because of what's going on. So it's very hard to pick a trend in the yen because the timelines are so much more stretched than anywhere else. But what we can do is watch for those moments where there's big news coming in or changes to the central bank and look to trade those potential trends, because they may be good for 5, 6, 7, 1,000 pips if they're strong trends. But the long-term game, it's still going to be a bit muddy and unclear how to trade that exactly. But anyway, that's for 5 years down the line. We'll come back to this show in 5 years' time.
you can't put a date on it, right? You can't put a timeline on it. It's so difficult because also it's Japan. And there was this funny line. You remember? It was Ueda when he was in the hole, right? Did he say it when he was in Jackson Hole? He said the lag of Japanese monetary policy is rather 25 years instead of 18 months or 2 years. And I think it was around Jackson Hole or so. Just let running through there a couple of those comments. Arif, great for Japs, weak currency. They are expert driven, great for their balance sheet. Okay, I just want to say something that the balance of Japanese needs has very much shifted since the big earthquake, right? Yes, they are still exporting, and they are exporting more and more big machinery and some services and stuff. But don't forget that they closed down a lot of their nuclear plants after Fukushima. Okay, so they have become actually a net importer country of energy and stuff, which has actually put an imbalance on their balance sheet or current accounts, which is now starting to reverse again. Okay, so but we have to be a bit careful with taking those old truths to look at a currency. Okay, and also don't forget that, for instance, the big four car makers, they have plants all over the globe. So the thing is, exporting themselves out of economic dips is less true than it was before. And then your next comment about the Plaza Accord, that was to devalue the dollar, right? That was when the dollar was racing away back in 1985. That was not really well. The rest of the countries were were crying, but that was to devalue the dollar in 1985. If you look at the other way around, and that was the Louvre Accord a few years later, where central banks intervened to buy dollars. Okay. Okay.
Yeah. Thanks, mate. Yeah, it's good. We're getting a lot of questions in the chat today, so we'll go through those. What I'll do then, I'll skip over some of the lines that really aren't that important in the grand scheme of things. We'll just tick over a couple of bits of data. We had jobs from Australia overnight, a good reading there. Employment change up 65k, beating the 23k expected. Unemployment rate stayed unchanged. That was despite the participation rate going up as well, so that's good numbers there all round. Bit of softness coming into Japan's machine orders, showing negative numbers there. Plays sort of into the manufacturing slump we're seeing globally, but another sign that side of things isn't doing well. Industrial production as well there from Japan, softer numbers as well, though not as soft as expected. Yesterday's US CPI, we'll have a quick look at. Pretty much on the money. The core came down to where everyone was expecting it to, 4.3%. Headline went up. There were expectations were a mix between 3.6 and 3.7, so we call that coming in as expected and confirming the jump there. The market initially in the seconds of the release popped on that higher beat in the headline, but then I think the core number took over, and then we saw the dollar pulling back after that. For the Fed, I think it depends. They can hide behind that core number and remain neutral, if you like, walking both sides of the line, or they could be a little bit hawkish on the headline number and reiterating that the job's not yet done on inflation. I don't think this data changes anything of the thinking really going into the Fed, although I still believe the market is underestimating a hike possibility or hawkish possibility next week, but we shall wait and see. That's it on those headline fronts there. We've still got the strikes going on in the US, automakers, all the bum fight going on over there. We'll leave that for now, and let's get through some of your questions and look at a couple of charts. Right, just going back. Ali, you're in cable. You got your big fingers wrong, mate. If you're short at 128.91, you've had a brilliant trade, mate. I'm going to assume that's 124.91. Yeah, as we can see, cables bumping up into that 125s, not liking it and coming back down. So what the battleground, the bigger battleground is 124.5 and this 124.50, which we've had a couple of cracks in the egg. So, we'll have to see what happens with this one. Probably maybe not too much happens over the ECB on this one, unless there's some drivers in the dollar. We might find this one going a bit sideways until the Bank of England next week, obviously on the pound side. So you're looking to take profit at, oh, it's scrolled, where's it gone? Take profit at 61. Yeah, that looks fair enough. Yeah, 61. You're in while you're leaning against this big figure, 125s. That trade is looking good, my friend. Arif, looking at gold. Let's take a quick butchers of gold. I'm keeping half an eye on this one. My main level down below is that 1885, 1890 area. Let's go into that one there. Oh, there we go. So we got this fib from 94, which has been a previous level on its own, but that 1885 is the main level. We have been holding this 30s area, which I was talking about when you were in your trade the other day, I think it was. That's the resistance line to take care of up there. We're not breaking through that. So we potentially got a chance down here. You've reduced your position. Geopolitical situation, wars, can we rely on the data being accurate? It's all political. You just got to trade the price then. If you're not sure about the drivers, trade the price. trade the levels. If you're short, doesn't matter, wars, data, whatever. If you get down to 1885, you've got a decision to make. Do you get out all your trade in case it doesn't go any further? Or do you hold it and try and see if it breaks and run it further? So it doesn't matter what the drivers are, what the reasons behind it are. You can only trade the levels at the end of the day. So good luck with that, mate. I hope you get your position in. Ali, we'll leave that question on who are the big players and whatnot. We'll maybe come back to that one another day. So remind us on that.
Yeah,
do you have anything to add there?
That may be enough for a whole flow show.
Yeah, exactly.
Starting to talk about who the players are in the market.
Yeah. Sorry?
Starting to talk about all of that is like, then you have to talk about what those people, who's doing what, and that's going to take a lot of time. Maybe you can come into our room and ask those kind of questions where we will have a bit of time to to reply or ask for some coaching.
Yeah, exactly.
Right. Just Angela. Hi, Angela. You're long UK 100. Angela, where are you based, if I may ask? Perhaps we asked that already. And what's the reason for you being long FTSE 100? It looks quite all right, I must say. Although I don't trade it. You're based in the UK. Great. What's your reason then for being long FTSE 100 then? It looks quite all right, but okay, let's move on while Angela is perhaps replying, because it's already 11 o'clock, and if we continue to go on, we are going to babble into the ECB.
Yeah, exactly. Yeah, we'll have a look at that, Angela, in a moment. But I was going to move back to Ali asking about the ECB. That's obviously the big one today. So just to give you I'll give you the plan I'm looking at today, okay? Because there's always 100 different scenarios that could pop up. I look through them. I think what is potentially the most likely. Well, the easiest thing to play on this one is this 107 level, okay? It's been solid since we've been down here. We couldn't break it. We've come through data. We've come through other comments, data from the US, data from the Eurozone, speakers, you name it, we've come through it, we can't break it, okay? So this is probably your true guide for what is going to happen today, okay? We might mess around over the announcement, over the press conference, go up and down it, whatever it wants to do. Where we finish the press conference is going to be important. If we finish the press conference above 107, then likely we see this reaffirming again as support, depending on what's happened here. And that's going to give you a bias, because if it can't go down after everything that's gone on, there's only one other way it can go. So this is your pivot line, if you like, for the whole of today. If we're above it, then you've got some conviction to be in longs. And likely we're going to be moving above these highs, because if the market can't push it down, it's going to give up. On the other side, if we're below 106 by the time the press conference finishes, and we start to see 107, 106.90 holding as resistance, we know there's a great chance that we're going to see further downside, and that is your resistance line thereafter. So if you want to keep it simple, just stick to that one line, 107s, okay? Where we are at the end of it, at the end of the ECB, is potentially a guide. Obviously, that's not set in stone. We could end up doing a waffly thing where we're up and down over it, and then what I've just said is complete bullshit. But I'm taking it. It's a big level. It's a big number. When you're trading, you've got a simple choice to make: buy it above, sell it below. In this instance, so that's the easy route. As far as the ECB goes, I'm looking at two scenarios. They either hike today and potentially signal they're done, or back on pause, and that pause may be for a greater length of time or whatever. In that case, we're going to probably get a reactionary pop on the announcement, and then that sells off during the presser if they indicate they're on pause after that hike. That'll mean we pop and then probably sell off. On the other side, if they hold rates now, we're going to see the euro probably falling, because the market has built up its expectations over the last week or so that they're going to hike. So if they don't hike, the market will be disappointed. We'll probably see a dip on that. If that is the case, I'm expecting Lagarde to then be hawkish in the presser, because she won't want to give the market a chance to undo a lot of the tightening they've done by getting all dovish. They will still be worried about inflation. We've heard rumour about the inflation forecast going up and whatnot. So this is again like the BOC. What's important? Is it inflation or is it growth? And if it's inflation, then they're going to bang that drum and say, right, we've held today, but a hike is still in the pipeline. So on that, we'll probably see a dip on the announcement, and then probably bid up over the presser when she comes out hawkish on that side. So those are the two scenarios I'm looking at. Of course, there's others. She could be super hawkish and say, we're hiking today, more hikes in the pipe. Or they could be super dovish, non-committal, we're pausing, we're worried about growth. Another hike is, 50-50, that sort of thing. That'll be dovish, and you'll see the euro dumping. Whatever plan you have, pick your scenarios that you want to trade. If the boxes get ticked, you trade. If they don't get ticked, maybe you sit on your hands and look for the next trade. But the simple way to do it is just look at that 107. We're either going to be above or we're going to be below. And that's what I'm going to be looking at today. Kay, what are your scenarios? I know you're pretty similar. It's hard to always cover every base, isn't it? But you've got to your most likely ones to trade, really, haven't you?
First of all, I'm going to start with DK, who made me really laugh this morning when you said, like, you've been talking about those ticking those boxes in our general room, and DK said usually my boxes get ticked after I trade. I found it so funny. It was such a great comment at the time.
Yeah, I'll put it up there. There you go. That was my message, my little ECB, so ideas, and then that was DK there. He ticks his boxes after the trade. Very good, mate. Very good.
Yeah, that was a really good one. Well, what are we saying? I think, if you look at prices, regardless what the comments are, if you look at prices, I think you hit the nail there with the 107. That's the one. And the other side is the 108. And I think that's if the euro closes above 108 today, it's probably a sign that the market either has been a bit too bearish for the euro, or that Lagarde gave us something to chew on for the other side. And unfortunately, and the more I thought about it, the more I came up with different scenarios. So that was a bit stupid from my side. I shouldn't not even think about the scenarios that Lagarde could give us. But there is a case, an outside, I agree, but there is a case for a hawkish hike today. And I did not really think about it too much before. And the clincher for a hawkish hike, in my opinion, will be QT. And when they start to talk about the PEP, the APP, and all that stuff, and if they say we are going to increase the role of the balance sheet, that may be the kicker for if they hike and they talk about QT. That may be all of a sudden a hawkish hike, which up to now it's not my base case scenario by any means. I think the two main ones are still like a dovish hike where they go. We do 25, signal the end, the possible end. They will never say like we are done, but they could signal we are where we thought we should be, and they worry about growth because especially in Germany, which is one of the big engines of the Eurozone, there's been some really weak data of late. So that is your dovish hike. Sorry, in which case we could see the algo jump and the euro doesn't make it or goes to close to but doesn't make it or hold over 108. And then there's your hawkish hold, which I think part one, Ryan is right. We probably on a hold go below 107 and then wait for Lagarde back around 107 or so, and she could then be hawkish and then come up again with QT and saying like we're not done and yada yada. But it was a very close call for a hike. I think then we're going to see a rally, but perhaps at the end of the day we are going to end up just where we are now. Or, in my personal opinion, if they hold, the euro will in any case close weaker because the market will not have had what they priced over the past 24-48 hours, and that will need to be priced in. Will it fall out of bed? Unlikely. Will we get closer to that prior low around the 106.35? Is it? That's a fair possibility. So there I diverge a little bit of the opinion of Ryan's opinion. I do think that if they hold, it is going to have as a result that the euro will probably end the day a bit lower, and then we talk about the 107. So that's the level is the level. That is true. What we need to say though is that the options are again not pricing an awful lot of volatility. So that the overnight at the money straddle, which is when you buy or sell a put and a call at the same time at the same level, is priced at 60 pips today, which is not a lot. It's a little more than over past events, but it's still not a lot. So that means that the option market is still pretty relaxed with the event of the day, and we have to note that barring a 10 pips here, there we go. If you can put the overnight up in the euro dollar, so you see the at the money there 107.28, and you see 30 pips for the downside, 32 pips for the top side. So at the money where we are, that is what the option market expects that is going to be. It doesn't mean that the option market expects the 107 or 107.60 to be the range. It does price in 60 pips of moves around the level. That's how we should understand it, okay? Not like strictly. And over the past events, the option markets have been sort of right. So I'm just throwing that into the mix as well. For people who would start to expect gigantic moves, it's not what the option market is pricing right now, and they have been sort of on the money of late. So that's a bit my view on it. It's going to be 107 or 108, right, Ryan?
Yeah, I mean, Ali,
hold. I mean, hold above or hold below. That's it. If we close at 107.30 today, then you're just waiting for next week, because I think it's going to be very rangy.
Yeah, and Ali, you're talking about skyrockets again. I think again you got to bring your expectations down. I'm not expecting, 200-300 pip moves out of this. Yeah, I'm expecting some volatility. We've got that volatility today because of the market having those increased rate expectations since last week. If we didn't have those expectations, then we're probably looking at a bore fest unless they hiked. A hike would have been the shock today. Now a hold is potentially the shock today. So yeah, and we go from here into the Fed next week. So that the market isn't going to get too far out its pram. It isn't going to go rocketing anywhere significantly unless there's some big news from the ECB. Because we're going to be slammed into the Fed next week. So the market won't want to get overly positioned, one-sided with that big risk event coming. But this is why I've been saying this month is important. This month is important for finding out exactly what is important for central banks, for the BOC, for the ECB, for the Fed. Is it growth? Is it inflation? Because once we know the answer to that, we know how to trade it. We know growth might falter, but if inflation's holding up, central bank's going to act on the inflation, not the growth. So that's why it's important. Once we come over this week and next week, we should hopefully have a clear idea, and then hopefully I'll have a clear idea which way I want to maybe try playing the rate cut play into the end of the year, and positioning for who's going to be the best of the bunch out of that. And on the face of it right now, that's likely to be the dollar. So yeah, don't expect rockets, expect some volatility, but you know, you can base your trades, as we've said, on 107. And if you get 108s, if you get 109s and you're long, great. If you only get 107.5, well, you'll have to take it if that's all the market's going to offer you. So that's all you can do. Let's have a quick look at the FTSE. Let's see what Angela's up to, jobbing away down there in sunny Guildford. Not too far from us, actually, Kay, Guildford, on the up the M3 and just over a bit.
Yeah, it's one of our stops on the train, right? When we go from our neck of the woods to London.
Yeah, sometimes it's a bit over the other side. We stop when the trains are screwed and they send us round the Havant line. Then we stop at Guildford. But Woking is there or thereabouts. Anyway, enough of the geography lesson. I've forgotten what she's doing now. I've lost it now. What was Angela? Long the FTSE. Long.
Yeah,
FTSE,
trading a break apparently.
Yeah, we got just this move above the big figure here, Angela. Trigger on price. Okay, yeah, so it's looking a bit rosy at the moment. You got a bit of a, I could probably draw it on, that might make it clearer. Bit of a downtrend to be concerned about. Let's see what that looks like, give or take. Oh, look at that. So you got me all in there.
You missed the top.
I missed the top. I hate it when I've got the epoxy thing on. Oh, bloody hell. See what you've done, Angela? You've got me in a mess now. Got me in a pickle. Right, it's not perfect science, but you get the drift. You got a bit of a downtrend going on at the moment. Got that support along the bottoms around the 72s. I assume you're just jobbing it, so you're going to be interested in around that line there, which comes against that prior top early August, give or take around 76.15. Yeah, it's looking all right. It looks like you've got a bit of a break here of the minor resistance over the last couple of days. So yeah, nice grab. I hope you make many ticks out of that one, and I hope it continues as high as it wants to go, all the way up to 8,000. I hope that happens. Or if you're in Highgate, London, yep, I know Highgate. I'm a Londoner myself. Right, Kay, you got any other bits of magic you want to show us for the ECB?
I'm going to keep it. Yeah, let's just look at ECB stuff, okay? And so I'm just going to, and I'm not going to take too much time because I'm looking at the clock.
Do you want me to limit you to 2 pairs?
Yeah, otherwise I can, as I said, I can talk into F.A.C.E and the ECB if you let me off the leash. Now, I mean, you know, I'm looking at this, and this is going to be a decider. Maybe not even today, but we may have to wait for FOMC really to decide on what the short-term differentials are going to do. But as I've said, this is your guide often for what's happening in euro-dollar, because it is the differentials between the euro and the US short-term. Don't try to chart this, okay? It's not an inverted head and shoulder. That it doesn't work in that way in yields. It can become one if you look at it that way, but I've never seen yields really following too much of a pattern, because the bond market is deciding on stuff. But anyway, for today, your tightest range here that you should be watching is minus 175-ish BPs to minus 190, 195 BPs, the differentials. So this is, if it goes up, the differentials are diminishing. So that's usually positive for the euro. If it goes down, the differentials are increasing, and that's usually negative for the euro dollar. And if you overlay the euro dollar from the 112s down to where we are now, and the stabilizing, you will see what I mean. It's not 100%, but it's quite a big correlation. So if ever we get like a really big surprise out of the ECB, I would start to look at those levels, 165 BPs minus, and on the other side, call it 200 BPs, okay? If we close the day anywhere outside those ranges, which I doubt, that would mean to me that we can be on for a fresh move in the euro dollar somewhere. If we continue to hover around in this range, then those option market makers are going to be right again, and we're probably going to trade ranges. So keep an eye on where we go and where we hold after the press conference. Okay, guys, don't look at this while we are still trading the actual statement. Don't. I need to add that we have US retail sales and PPI as well out this afternoon, so we could be in for a bit of saloon doors or double whammies on the euro dollar. So watch it carefully, and then we're back. I think this is if this takes a direction, that's going to decide upon your 108 or your 107 really for the close of the day. And I would really like to keep the euro dollar as simple as that today, 107 or 108. If we stay in between, it's likely going to just stay there and range trade. There's one which has
just a quick
yeah.
1K. Horatius asking, why do you look at the 2-year diffs versus the 10-year diffs?
Because that's your day-to-day. Your day-to-day moves are more or less directed by these ones. That's the closest one to your spot market, if you want, because the 2-year is the closest one to immediate expectations for central banks. For instance, and that's, I mean, somewhere you have to look at what most in the market are looking at, right? If you look at the yen, for instance, the yen is really following the 10 years. If you look at the cable, for instance, the market acceptance is that we more look at the 5 years. And don't ask me why. I'm not a bond trader, but I'm just over time, knowing what the market is looking at is more important. If you look at something else than the market is looking at, you're going to probably end up with more questions than answers most of the time. So that is the thing, which is those 2 years are the closest ones that we can trade and the most correlated to the spot moves based on immediate ECB and Fed expectations, right? So the other one, since it's ECB, is looking at those euro crosses. This one has been going down quite a bit. I just traded really short-term scalps on it. I didn't I don't really have a more medium-term position. But for as long as oils remain bid, if gas remains bid as well, that's perhaps not too good for the eurozone either because of the reserves and stuff like that. This is still looking pretty weak. Keep an eye on what's happening if the euro would start to reverse. Keep an eye on what's happening here. 145, 75, 90. That is going to be a pretty decent zone to monitor now. Okay, if we get a hike, for instance, and a bit of positive comments or hawkish comments, and we get into this zone and fail, that means that nothing will have changed, and we're likely going to drift lower again. Okay. If you go up here and we start to break, then the picture may actually be changing, and then something may be changing in the euro. Okay, the euro yen is a really difficult one to read for me right now. It's bid. It's undeniably bid. Okay, we have to start to go below 156.60 to really turn it around. In the meantime, 157.5 ish and 158.60-75 there. That's going to be your range to start monitoring of the day. Did you do the euro sterling already? Because I think that 86.20.30 is relatively interesting there.
No, I didn't. But I'm
so that's the quick one here. The quick view of the euro sterling.
That's your last one.
Huh?
That's your last one.
Okay. So the euro sterling, because the sterling is showing a bit of signs of topping out or being a little weaker. Watch what's happening in the 86.20 prior top 30 zone. If that would go over the ECB, then I think we are in for a move up to at least 86.60s and perhaps even 87. Okay. If we start to break back below 85.70.80, then meaning that the ECB may be a bit dovish. And back over to you, Ryan.
Thank you very much, mate. Well, a big old session, and thank you for all the questions and thoughts. it's much more interesting when we're answering your questions and going through stuff that's going through your mind rather than just us waffling on insistently. So thank you very much for that, and as always, thank you for Kay and all your valued insight. Stay safe over the ECB. Watch the data as well, as Kay mentioned. You know, you might see a move on the announcement, and then that gets tipped around with the data. Might give you better levels, might give you worse. So take that into account. Trade safe, and we shall see what happens with it all tomorrow. Thank you very much, everyone.